Hi guys, KenFX Freak back with another Monday Money Madness. The 3Ms, baby. Yes, I can't believe the new week started again. I love it. I love it. I say it all the time, but Sundays I love because it's all about, preparing all the analysis, reviewing obviously what happened last week, staying plugged in with all the events, the tones, the themes that we're sort of set to see this week. Well, as much as you can really, because things chop and change. That's the beauty about these markets. We've got to adapt with the new information that we're absorbing. It's not about what we think, it's really about what we see, and adjusting accordingly to that. So really looking forward to this one. It's a very, very busy week, I must stress, guys, okay? Extremely volatile, so make sure you keep an eye on the calendar, because you don't want to get these bad boys, your fingers burnt, and then you start being thrown off course. So, with the Monday Money Madness, where should we start really? I'm looking to start with the dollar. I just want to talk about the dollar initially and how we'd been last week was very much about selling pressure for the Dixie. Why? It's all about risk appetite. Markets were hungry for risk. Remember, when we're seeing risk appetite, dollar dump, yen, get away, Swiss franc, we don't need you. Okay, we don't need those safe haven currencies. We, the markets, want some riskier currencies. We're piling into AUD, NZD. You're seeing some gains, obviously in GBP. GBP, actually, real outperformer last week. I'm going to get onto GP in a moment. But if you look at the the Dixie here, I'm going to bring up the weekly chart. You can see how I've been selling for 3 consecutive weeks last week, right? And we tested this huge area around that mid-96 region. You can just see that on the weekly chart. I did show this in the podcast, I believe. Really big area. And it's, we should, in theory, see support here. But supports are meant to be broken. They're meant to be broken. So keep an eye on this being broken down potentially. If that risk appetite continues, and I'm going to get into a reason as to why we could continue to see actually risk appetite this week. But dollar on the back foot just at the time recording this. This is just before 7 a.m. London time. Okay, so around 1 a.m. Eastern time on this Monday morning. So, as I mentioned, you would have mentioned from last week, you see on the dollar there, we had that ascending channel, that bear flag, I was calling it, whatever you want to call it. Here's all of our pile where we've been falling, all this risk appetite, given improving data, had this period of consolidation, and we broke out on Monday, retested, and made way for further downside. So literally playing out magnificent to technicals, to the textbook move there with that breakout and retest of that bear flag. Now, what's Ken drawn up here? Excuse me. I've drawn up a potential secondary flag structure, which could be subject to a breakout to the upside. It is Monday flows, so time will tell on that. Things will become clearer in terms of the market's desires or trend. But maybe we're waiting for a lot of this key data that we're looking out for this week. It's some huge, as I say, very huge data points. Extremely busy. Now, let's just quickly talk about last week. So, as I said, data, we yet to see a bit of bad data. Globally, it's just looking good, nice and buoyant, like labor market improvements, as I say, manufacturing services, PMIs, all these data are looking great. Aside from the data, there's a lot of optimism around COVID-19. Okay, COVID-19, a vaccine. A vaccine, I don't know whether I'd have that or not. I don't know. I'm not a massive conspiracy theorist by any means. I'm not even going to go into this. But I don't know whether I'd want to take on that vaccine. But markets are loving it, okay? Markets are loving this optimism. I don't know if you can see very clearly there, but you can see on my screen here, Gilead Sciences. So their drug is known as remdesivir, and it's said to significantly, according to the stats, improve the death rate, okay? Improve people getting better from, obviously, from the virus. So this is really supporting the markets at the moment. Whoever comes up with because I know there's a few companies working on vaccines and stuff, but it looks like this is being the most promising one so far, Gilead Sciences. So that's also supportive of risk appetite, okay? At the end of the day, there's going to potentially a vaccine that's going to come into play, and they're looking to really fast track it, get it into the markets as quickly as possible. So by the end of this year, still some time. But you think if a second wave of potential crisis starts cropping up, is in theory cropping up in the United States, and then that starts spreading globally over the next couple of months, maybe that could be in time to prevent a sort of a second wave. I don't know, maybe not. But markets love it right now. So that helped the markets last week in terms of that sentiment, that risk-on sentiment. Let's get on to GBP. Okay, I'll come back to the dollar in a little while, but I want to jump over to GBP. Wow, it had a very strong weekly performance last week. Okay, it's two consecutive solid performances there for GBP versus the dollar. Why, Ken? Well, let me just explain something. Okay, GBP is so sensitive to market sentiment, massively. Look what happened here in March. GBP was one of the worst hit, literally battered. All right, it was beaten up, bloodied to a pulp in March when this the COVID-19 situation was going off. I don't know what it is, but historically, GBP tends to really, really underperform in comparison to its peers, okay? In times of economic crisis, in times of geopolitical crisis, the pound is getting a beating. GBP. So we saw that big beating in March there when COVID-19 was really, really hitting the market. So in terms of specifically last week, there was a couple of reasons as to why the GBP is supported. Let me just remove some of these excess trend lines. The week prior, by the way, we broke out this nice bull flag. And I mean, if you look at this bull flag structure, let's measure the pulse, some 500 pips. So that could be well and truly making a good stamp towards the 130 mark, okay? The psychological 130. We're seemingly trying to... I thought this could have been like a potential tweezer top here. Two sort of candlesticks to suggest the buyer's running out of momentum, but no. Big buying coming into play this early Monday morning. Oh, no, that's not what I want on. Hey, GBP! All right, that's enough. So why is GBP rallying? I need to get used to these buttons. I can play around with them. GBP, why last week? Why are we seeing that upside? Few reasons. Actually, two main reasons. One, the risk appetite, okay? Great. GBP's loving it. Remember, as I say, it's sensitive to sentiment. Two, very good talks, actually. Barnier, this is Barnier, EU's Barnier. Michel Barnier, the chief Brexit negotiator for the EU side. He actually met his counterpart in Downing Street last Tuesday, and talks went generally well. They went generally well. There's seemingly EU potentially softening their stance on one of the key barriers, which is the fisheries. It's a different thing that. But anyway, it's a barrier at the moment. But they are having some good talks. Constructive talks are being seen. And they wined and dined at Downing Street last night. Drinking wine, I'm sure. And whatever else they were doing. So that was supportive of GBP as well. And then this fella, Sunak. Let me bring him up. Rishi Sunak. So let me just show you who he is, just so you can see. This chap, who I believe is doing a very fine job. He's doing a very fine job as Chancellor. He's taken on a big role, in times of big crisis. He's come into play, helping introduce all this stimulus to the UK economy, right? A lot of schemes to help support businesses, a lot of schemes to help support consumers, families, so on and so forth, with all this, as I say, stimulus. And this has been supportive of GBP. Now, last week, he introduced a few things, some sort of stimulus measures for businesses, for restaurants, for consumers, and it was very well received for the pound, very well received. So that's another reason why we saw GBP pushing to the upside, and still really no signs of a slowdown here. We can see there's a lot of resistance around this mid 126 region, which does have some room to break out to the upside so long as this theme continues. Now, let me talk about the calendar this week, okay? Let me talk about the calendar. Today, nothing really on. Tuesday, a few data points. GDP for the UK expected to bounce back, okay? So remember that. GDP, we're looking for a decent number there for the UK. So expecting that to bounce back out of that awful, awful contraction. That contraction that you see here, that was the worst that we saw. That was 3 times greater than what we saw in the 2008, 2009 crisis. That's just how bad it is. Yeah, really, really bad there. We've got manufacturing production expecting a big rebound. Industrial production for the UK expecting a rebound. If we look over in the US, CPI expected to pick up. All right, prices rising of goods and services. Why is that good? Well, people are spending. Back to spending. Economies reopening. Businesses are making money. So, of course, prices are going to go back up. Makes sense, right, guys? Got the Bank of Japan. Not expecting much from them there. They may be a little bit optimistic. UK CPI expected to remain broadly unchanged. We've got the Bank of Canada. I'm going to come back to the Bank of Canada. I just want to skip through the data just to make a point here. Unemployment rate in Australia is expected to pick up. Not good, understandably, given the situation. But Australia are one of the best countries at dealing with COVID-19, by the way, guys. But I think this expectation is a bit harsh. I think we could be in for a decent surprise there. Good amount of jobs re-added to the economy. GDP in China expected to bounce back, okay, from minus 6.8%. Now, look, I'm skipping. Retail sales in the US, not expected to be great there, understandably, given what's happened. But in general, it looks like the markets, in terms of the risk on, we have an opportunity to carry that through. So long as all of this data globally remains buoyant and shows signs of rebound for that V-shaped recovery, yeah, then risk appetite continues and dollar remains under pressure. Now, let me talk about the big risk. Actually, let's go back to the Bank of Canada. What am I expecting here? Not expecting too much. For them to remain... Man, I think they've got to be cautious because of what's going on in the States. And that's going to lead me to my next point. They are next-door neighbours, right, to the US. US is their cousin. So I think they've got to be cautious and, continue to want to support the economy with the stimulus that they've got going on at the moment. And that... If they continue that sort of pessimistic, dovish tone, that could likely weigh on CAD. Now, one thing that I'm surprised the markets didn't gap lower at the open was this: Florida, COVID-19 cases. Wow, look at that huge spike over the weekend, guys. Over 15,000. That's insane. Look at that huge spike. Wow, it's the worst. So, I mean, you can see the map of the cases anyway. They are rising drastically, all in sort of in the sort of Florida, Miami, Orlando, Jacksonville, all that region there in the States. Yeah, not looking great. Numbers continue to rise anyway. We saw last week the sort of, I think, like an all-time high above 66,000 it was. This, if anything's going to change market sentiment, is this. Okay, it's this. If we start seeing this, okay, it's already spreading across the States and the US, but if this starts hitting globally again, neighbors of US and then globally, and then that's when, we see those big flows coming back in dollar. But markets right now are thinking, do you know what? The worst is behind us. The worst behind us. We saw that shock factor. Okay, we've already seen that shock factor of this. Where was it? All of this. So the worst is behind us, potentially. We know what COVID-19 is about, but if that second wave hits, I think that's a different story. What did I want to show here? It was US 30. You see the way US 30 continue to grind high. I've got all earnings this week. Big companies reporting earnings from the United States. There's a lot of optimism around that through some of my contacts we're speaking to. US 30, Dow Jones looking to break out here out of this sort of daily consolidation, sort of the past 5 sessions, potential bull flag there. Keep an eye on these, challenging these highs here for June. Wouldn't be surprised if we do go on and hit that. You can see if I was to mark up like a secondary area of supply, you can see that around this sort of 26,300 area, which if we can break out of that, then we're going to sort of push into mid 27,000. So keep an eye on that. So yeah, guys, markets are hungry for risk, without a shadow of doubt. But there is this big area, as I say, for the Dixie that we must keep an eye on. Whether we catch this bounce here, you know, this can be seen as a daily as a weekly double bottom, okay? Potentially. You know, that being the first sort of bottom area. And this being the second. Yeah. Potentially one bottom, two bottom, and the neckline up here at 97, 77, sort of 80. So just keep an eye on these key areas. Keep an eye on all the general developments. I mean, we do that every day at freaknetwork.io. We're getting a screen, okay? I'm getting a cubicle in this area up because that light, I do apologize, on that screen is very annoying. Very annoying. The sun's beautiful though, but that is annoying. Okay? All right, guys, let me start rounding this off. Yes, as I say, keep an eye on that. That could potentially be like a double bottom area, one bottom, two bottom, and the neckline up here, which we could break. It's just, for me, it's just, we do either of two things here. We break this region, perhaps give a wick retest, confirm new resistance, and then this really drops, okay? For me, the next major zone is down here, I was saying in the podcast with Joel, down at this sort of 93 region. Or we catch this as a double bottom, okay? A double weekly bottom, and we extend to the upside from here, end up smashing this neckline, and boy, excuse me, would that fly? Would that fly for sure? Boom. Okay, one of those two. What else we got on there? Stop. I can't stop it. All right, there we go. All right, guys, look, very busy week. I hope you found some value in that. But other than that, baby, in terms of daily, real-time, fundamental and technical analysis, please do not hesitate to check out freaknetwork.io. We do this, baby. Setups, everything. Stay lit. Let's get it.